This is the crack up boom. And when it really gets nuts, done again, is when the public at large realizes that the Fed is out of options, that they are truly out of options. They can either sacrifice the dollar through inflation, which is the path they will take, or blow everything up, and there is no middle ground. So when that happens, not only will you see the bond market blow up, but you'll see the stock market be kneecapped, and then people will run, not tiptoe, but run to whatever precious metals are still left.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us, 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update today, Tuesday, February 8th, 2022. Andy, thanks for coming back on Liberty and Finance.
Good to be here. Sorry it has to be by phone, but I don't know what's going on with my internet. Done again, but it's not connecting.
Yeah, we've been struggling. We struggled with a couple of video methods. None of that was working, so we've bailed back to audio only. So people, please bear with us. This is going to be audio only today because we've been having poor connection quality issues across the internet today. It kind of underscores something we've talked about with several guests recently about fragility and dependency on our technical infrastructure, not only the electric grid, but all just-in-time shipping, trucking, everything. Another thing is internet connectivity. We rely on that so heavily for many aspects of our lives, and we always need to think about a plan B. So we're going a different route today, and people, please bear with us. So Andy, one of the things that we've had asked by a viewer in anticipation of your arrival here was a question. And you've talked to us in the past. Oh, goodness, we've been concerned about this since 2015 when the silver price and gold price hit a deep low back then. People were talking about mining, straining the mining industry because it was the price being set on the paper exchange was below the cost of production. And things have come up quite a bit since December of 2015, but still very slim margins for producers. Where there was recently an interview on Arcadia Economics with Dan Dixon, the CEO of Endeavor Silver Corp. And the question was from a viewer. Dan Dixon recently stated in this interview that the company withheld approximately 1 million troy ounces of silver from the market starting in mid-2021 due to the low spot price. Are you aware of other silver miners doing the same? Is this substantially impacting the overall silver supply right now? And how common is this practice of withholding supply?
Yeah, kudos to Dan and kudos to Keith Neumeyer. They're the two that I know of that have stood up, I guess you could say, to the relentless price suppression of silver. But let's dig into it a little bit to see how significant it really is. You know, you talk about 850 million ounces or so being produced each year, of which only 30% of that comes from primary mining companies like First Majestic, like Endeavor Silver. And the first thing that I'd like to say about it is that, you know, you're dealing with a cost-intensive market. And if you listen to that interview, I was fortunate enough to catch it. He talks about the fact that we need to sell our production in order to keep the company going. It costs a lot of money in energy, which is of course is increasing, and in labor costs. And so you have continuing expenditures and costs, and holding back production, as noble as it sounds, can be crippling to the bottom line for the company, and of course the end results to the shareholders as well too. And so I think that while it's a very noble endeavor, it doesn't happen very often. And when you see a company like Endeavor withhold, and that was no pun intended, by the way, noble endeavor, but when you see a company withhold 1 million ounces out of 850 million ounces annually produced, that represents just over 0.1%. It's spitting in the ocean. And while it definitely sends a message, I think the message is bigger than the effect, than the net outcome. It would take a concerted effort by a lot more than just one or two companies to really make a dent. And I think that more realistically, if it happened more with gold, if the large gold producers withheld their production, I think it would be more significant in the respect that I think it would pull along silver for the ride. And I just think that it's an issue where I wish more companies would do it, but I don't think it will happen simply because it costs too much to the bottom line to withhold silver. And unless they start withholding all of their production, not just 1 million ounces, but all of the production in concert with others, which I guess you could call it to be collusion, which have a problem unto itself. I think that it's noble, but probably doesn't amount to too much in the end.
It's akin, I believe, to going on strike if you're a laborer, a worker, a professional, anybody who believes that they're not being fairly compensated for their efforts, or it just doesn't pay, that sort of thing, to just say, I'm going to withhold my services then. I'm going to cease this, and I'm going to forego that income that I would have been making now because this is intolerable working conditions or contract or rates or whatever. And it's easy to say when you're on the sidelines, why don't people just strike? Why don't they just stand strong? It's tough to do if it's your bread and butter, if it's your weekly, monthly, quarterly income that you're foregoing to do that.
Exactly. Why not just keep doing a hunger strike? You do it long enough, you die. Well, that's the same thing with the business. And so unfortunately, because it costs so much money to pull metal out of the ground these days, because when you realize, in particular in silver, remember, we've talked about before how it's found in nature in a form called epithermal, very close to the surface. So the low-hanging fruit has been picked long ago. So for companies like Endeavor and First Majestic, they need to pay more money for properties. They need to dig deeper, explore further. There's greater expenditures in energy and whatnot. The costs are forever increasing in this industry, and to withhold production really creates a problem to the bottom line. And so I think that, yeah, I wish more companies did do it, and certainly they'll gain notoriety for doing it, and maybe more will follow suit. But in general, I think that it's novel and it's admirable, but I unfortunately don't think it's going to have a huge impact other than to gain recognition and every bit of light shown upon what is a manipulated market. It's good. It's important. And I think that little by little, the word will get out there. And, you know, the only way to manipulate a market over time is to push it in the direction that it is going. And for a very long time, it's been easy for the banks to hold back the price of gold and silver because no one noticed it. And maybe more types of actions like this that we're seeing from Endeavor, hopefully we'll gain a little bit of traction and notoriety, and we'll see a light shown upon what is, I believe, the value proposition of a generation, and that is silver. And the price doesn't make sense. It's crazy that it's just barely $23 or whatnot, and you know, it should be much higher. If you just took the 7-to-1 ratio where it's coming out of the ground right now at 7-to-1 and divide it by gold right now, you're at $260 silver. So if someone said to you silver should be $260, don't laugh at them. That's very actually conservative, and that is what the geologic ratio in the ground right now globally is telling us the price should be. And instead, it's roughly 11 times under that. And you could argue that gold or silver in its relation to gold is 11 times undervalued.
Coming from my own over 35-year career in manufacturing, engineering, and manufacturing operations, one of the things that I also got confirmed when interviewing CEOs of mining companies on our channel is that people's concept of, well, why don't you just stop for a while until the price goes up, that operations don't always stop and start well. Some things are best operated in a continuous manner. Several of the CEOs have talked to us about, especially when you're working in harsh environments, that sort of thing. If you just stop all your equipment, the mines fill up with water, all the equipment rusts, your crews go off and find other work. And it isn't something you can just flip on and off like a light switch. You can't just necessarily stop operations for 3 months or 6 months or 9 months and then go, okay, now we're going to start up again and have it just. And that's emblematic, too, of what's going on with our fractured supply chain that you've focused on for a long time. This is happening globally across lots of industries. Is things happening in fits and starts, whether it's vehicle assembly, on down the line, is a lot of industries are just crushed and crippled by this on again, off again, available, not available, parts, etc., crews, repairs, and that kind of thing. But it certainly affects the mining industry. It is not realistic to just turn off your operations just to make a point and then think you can just flip them back on again later.
Yeah, of course. And when you realize that, everything, all commodities and in particular oil is rising at levels not seen in a long time. And yet what the end result of what you're pulling out of the ground has been suppressed for so long, it makes it that much more difficult just to keep the lights on, let alone to withhold production. And so I think that's a very good point you raise. At the same time, these mines are not found down the street. They're always in remote areas that take a good deal of time and effort, not only to get to, but to get your machinery to, and to have your machinery serviced and get fuel to. And I mean, it's a very large production. So kudos to Dan Dixon, and kudos to Keith Neumeyer for having the courage to, in their own way, stand up. And I think that's really what they're doing, is they're doing their own little hunger strike. And the more we can publicize it and talk about it and thank them for having the courage to stand up to what is an overtly suppressed market, specifically so that, people don't see the frailty of the dollar and the U.S. equity markets, the Western markets. It's admirable. I would only hope that we would see this spill over into the big gold producers, and I think you would start to see some traction, because I just think there's some you would start to see it on more of a mainstream awareness if the large gold producers started withholding production into the market. And but you never know. You start somewhere, and I give these guys credit. But to your listener's specific question, unfortunately, I don't believe it'll have much of any impact on price. But maybe it's the beginning of a trend that we'll see, where more and more producers will at least talk about this, acknowledge it, and do what they can to combat, even just standing up and speaking to the media and saying what's happening isn't right goes a long way. And this is going a little further, and I give them kudos and hope it's the beginning of more awareness, if nothing else, to just what's going on in this industry.
I guess it bears saying, in combination with this, what Rick Rule often has pointed out to us, and that is, if you're going to be a contrarian and a value investor, not to go with the herd or with momentum, but to look for opportunities where there's mispricing or under-recognized value from whatever reason in the marketplace, then you want to go ahead and put yourself in that position where you're seen as being out of step with the herd. You're seen as being wrong. And he says you have to be wrong long enough. Sometimes you have to be wrong a long time if you're really going to make sure you're positioned to be right when the rewards are going to come. And we've certainly seen that in, when my wife and I were taking a tour of the Black Hills in South Dakota. There was a historic gold mine. We were touring it with our sons. The tour guide taking us through the historic gold mine, which was no longer operating, but it was for historical purposes. It's basically a museum that you could tour underground. And she said, now across the street was an operating gold mine until last year, until they shut down because of low gold prices, and it wasn't profitable. And it didn't occur to us at that time that, that's a clue when operating enterprises have to cease operations because they can't turn a profit on it, that there's a value opportunity there to be seized on. So that's another response to this as an individual, is to see the opportunity, the silver lining in this cloud, not literally.
Absolutely. Well, the cure for low prices are low prices, and the cure for no production, we would hope, would be more production as prices go higher. But I mean, this is a vicious circle where if they don't produce, they go out of business, and so that's really the bottom line. And I think that we just have to hope for some sort of a awakening where the price is set free, and these issues won't be. We won't even need to discuss these issues. But for now, I have all the admiration and respect in the world for Dan, and I think that it's people to show their gratitude. Go out and buy a few shares of Endeavor. Go out and buy a few shares of First Majestic. Show your support that way, and don't be afraid to talk to people about this and tell them what's going on and get the word out there. And the more people that wake up to the value found in precious metals, and as it relates to what's happening to the U.S. dollar, at the same time, I think the greater the likelihood that we see this suppression start to break, and that's certainly, I think, a good place to start. We have a $30 trillion debt right now, which is 25% larger than the entire U.S. economy. And I just don't understand how more people aren't waking up to this. So let's just hope that the courage that Dan and Endeavor has shown spills over into more of the marketplace and a greater awareness at large.
If we could zoom in closer to your bailiwick of the operations of the supply chain for silver on the retail investable bullion side, could you give us an update on the trends that you're seeing, the retail demand, the retail and the wholesale supply availability, the mix of gold versus silver and platinum that people are acquiring or that's available, and just if you could give us your latest update on the trends at the retail level?
Yeah, sure. And I think the retail level starts at the wholesale level, and also even you could argue at the LBMA and the COMEX. And, this month alone, we've seen 26 tons taken off the LBMA of gold and over 600 tons of silver drawn off the LBMA. And on top of all of the acquisition taken off of the ETFs. And this speaks of when they're going to this length to pull metal off of different platforms like ETFs and the LBMA. We've documented the massive amount coming out of COMEX. I think it will also speak to just how difficult it is to get product wholesale and retail in this industry. And honestly, I've spoke about this on your show for over a year now, get lots of heat about it for being the little boy who cries wolf. But I mean, it's happening right here, right in front of us right now. And getting product every single day is getting harder and harder and harder and harder. And I'm having a really difficult time bringing in things that we've sold for the past couple of years. And the premiums are so obnoxious, I don't even want to buy them. And so I think that it's just more of the same. Then again, it's getting really difficult. Getting things like the UK Britannia, the South African Krugerrand, the Austrian Philharmonic, what used to be easy, and it's next to impossible right now. And unless I want to pay really high premiums, that basically means I won't make anything turning around and selling it. It's happening in real time. Now, does it cool off? I don't know. Look at what Jeffrey Christian said about all the commodities at all-time highs and shortages in all of them. I mean, he's talking about shortages in everything that the whole commodity complex, oil, gas, gold, coal, copper, aluminum. He says, you name it, we're out of it. And that goes in line with the gold and silver taken out of the LBMA and the Bank of England vaults that we just talked about, the drawdown off the ETFs, the drawdown off the COMEX, and we're seeing a drawdown in physical supply. Guys like Ted Butler talked at length about for years that he believed that a lot of these very large institutions, whoever they are, that was accumulating metal were buying U.S. Eagles and silver maple leafs. I mean, is it that far-fetched to think that they don't have their buddies draining the physical availability from the Perth Mint, from the Rand Mint, from the Austrian Mint or the UK Mint? I don't think it is at all, because all of a sudden I can't get it like I used to. I really, truly can't. And so I think that's the trend that I don't see changing. In fact, it's getting worse. And every day I talk about this, you know, I'm sure there's a good deal of cynicism out there, people thinking that I'm just trying to better hurry up and get it before it disappears. Don't take my word for it. I'll just simply tell you, in all the years I've done this, and every time I've ever said this, it's getting harder and harder and harder. So, yeah, I don't know, Don. Again, this is the most difficult it's been in 33 years. Right now, right here and now. Not gold, and not all kinds of silver. I have plenty of silver eagles in stock. Only problem is they're, you know, over $8.50 over the price of silver. I have bags of junk silver in stock, and we're going to continue to run that special. But at $5.99 over the price of silver, as much as I love them, that's still 5 times higher premium than it's been my whole career. And so whatever you're talking about, whether it's in stock or not, even the Kilo Valcambi bar, which I love, at $2.75 over the price of silver, that's 4 times higher premium than it's ever been my whole career. So it's happening, it's manifesting, and what is available, you're paying higher prices for. Because as I've said a million times on your show, there ain't anyone selling an ounce to us. So when the supply chains dry up, like we're seeing across the globe in other items from consumables to hard commodities, who's to say that it's not going to happen or isn't already happening for whatever the reason may be in physical metals? I would argue it is, and only is going to get worse.
What you just described, I think people can relate to if they just think about what they're seeing in their local grocery stores and other supply stores. My wife and I have been just noticing more and more and more difficulty in getting not only the things that we usually, and that's even with mail order for home delivery, not available, partially bare shelves at the stores, at our local new car dealer that just got built in our town. They've got the front row right up along the road full of trucks, and then the huge empty lot behind it. So it's not just in the metals; it's across all materials. We've spoken just in the past week with not only Rob Kirby, a Canadian native, about the trucker rally and freedom protests going on up there that are affecting basically the truckers who are necessary as part of the critical infrastructure for moving things around the country, saying that the mandates and so on that they're subject to are intolerable. We had a trucking industry insider on our show saying it's not getting any better. It may go on through 2023, 2024. We just had James Rawls from survivalblog.com taping an interview where he says he sees grave concern of runaway inflation because of these commodity shortages and people doing what people do. A natural reaction, both for companies and for individuals, is to try to snap up what you can while you can in the face of looming shortages that don't show any end in sight. So a lot of reason that I think people can relate to. You're not crying wolf anymore. They're seeing it in many, many areas of their lives. You said that there are some forms of silver you're still able to obtain at the moment, even at higher premiums than ever in the past. But we are trying to offer those at highly competitive prices. So can you bring us up to date on what we do have available this week?
Yeah, we're still going to run with the silver, junk silver bags. We're going to continue those until we run out of them at $5.99 over. We're also going to keep the Noah's Ark in 1 ounce. These are 2022 Noah's Ark at $4 over spot on those and $2.50 over on the 1/4 ounce coins. And we do have about 50,000 brand new silver buffaloes in stock at $3.19 over to give a nice selection and alternative in terms of choices, which is really what is disappearing, is the lack of choices. We're going to try to bring 3 or 4 things here to your listeners that will give them the opportunity to get some silver at a decent price. before all of our choices disappear, which is something that I'm not happy about, because just trying to get things like the Philharmonics or the Kangaroos or the Krugerrands, which has been our mainstay for the past 2 years, things that I like to offer, I don't have enough of them or at a price that I'm comfortable offering to bring those to the public right now. So we're going to go with the Buffalo rounds, which ironically over the past 2 years have been harder to get than anything. So we do have those in stock right now, and we'll offer those as well. You know, it's interesting too. I was listening to you wonder why we are where we are. I was listening this morning to an economist for the St. Louis Federal Reserve, and the topic was, does the national debt really matter? And he said, you know, people view debt from a household perspective. He says, but a household has a finite lifespan, where the government's lifespan is indefinite. So governments never really need to repay their debt within a finite period of time. They just can roll over their debt indefinitely. This is actually coming out of the Federal Reserve Bank of St. Louis. Went on to say that the treasuries represent a claim on U.S. dollars, and because the U.S. government can just print dollars, there's never an economic reason for the Treasury to even ever think of defaulting on its promise to pay back in dollars. And that the national debt constitutes liabilities that show up as assets somewhere else, like your pension fund or your insurance policy. This is not a burden on our children, he said. It's just corresponds with an increase in household wealth, because it's a debt to the government, but it's an asset to the public. The lunacy coming out of our government and the Federal Reserve is so extreme that they're creating all of this misallocation of capital. This is the crack up boom. And when it really gets nuts, done again, is when the public at large realizes that the Fed is out of options, that they are truly out of options. They can either sacrifice the dollar through inflation, which is the path they will take, or blow everything up, and there is no middle ground. So when that happens, not only will you see the bond market blow up, but you'll see the stock market be kneecapped, and then people will run, not tiptoe, but run to whatever precious metals are still left. So that's why we're seeing the things that we are. We have a government who has just lost its bearing and tells us that debt isn't a problem, because unlike a person who has a finite lifespan, the government lifespan is indefinite, never needs to pay off its debt because it can just continue to roll it forward indefinitely. If that doesn't tell you where we are going, they are going to sacrifice the dollar. They're going to shake the markets by raising rates for a little bit. Then they're going to backtrack, and they are going to sacrifice the dollar in its current form and not letting the markets disintegrate. So this is why people should be thinking about adding precious metals, because when people figure this out, when people figure out the fact that there are no options but inflation, it's going to be all over.
Andy, we wanted to thank you always for joining us on these weekly market updates. We try to do live streams when we can. We try to make sure we show up every Tuesday at 9 p.m. Eastern so people can look forward to that. And a lot of people do count on that. It's one of the most highly attended premieres with live chat every single week. Folks, if you don't want to miss out on a single episode with either Andy Schectman or any of our guests, make sure you sign up for our free newsletter at libertyandfinance.com. Just put your name and email address in. We'll get you on our mailing list. You'll get every single episode, no matter whether they go to YouTube or only to our other social media platforms that are freedom tolerant and free speech tolerant. So Andy, as always, on behalf of all of our viewers, and we just passed 66,000 subscribers in the past week, thank you for joining us here on Liberty and Finance.
Pleasure was mine, Doug. Again, thanks for having me, buddy, and I look forward to seeing you next week, Tuesday.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability. and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.